right, welcome everybody to the stock market review, specifically for our Yummy subscribers. But we now put this on YouTube to share it with everyone. There are big advantages to being a Yummy subscriber. You get the reports on Sunday, and of course, we have the live room open all week, so you can go in there. We have presentations and so forth. So definitely check it out on our website under subscriptions. All right, so a lot to talk about today. Markets are down about 50 points. Well, the Dow is anyway. Dow Jones is down about 50 points. NASDAQ, I think, is down about 100. All right, so kind of a mixed day. All right, that's not a big deal at the numbers we're sitting at these indexes here. So it's kind of almost like a flat day, so to speak. But we're going to go over the charts. I'm going to tell you what I kind of think. We're going to cover the housing market as well. In terms of looking up individual stocks, I've got a bunch I'm going to show you. I want to go over crude oil. I want to go over crypto. I want to go over silver, the bonds, TLT. I want to take a look at that ETF. So we got a lot to cover here. Now, if you're interested in having me look up stocks, individual stocks that you may have an interest in, come to our Friday Stock Analysis Fridays event. That's where we look up everybody's stock. Again, it's on YouTube. And once you subscribe to our channel, you'll see where you can basically sign up for that. And it's a free service. And we're here for about an hour to an hour and a half on Fridays going over everybody's stocks. And it starts at 8 o'clock. So that's Pacific time. So definitely think about that if you have some stocks I want to look up. We probably won't have much time to do that because I have a set format today. And I'm going to cover the markets and also the housing markets and then those individual stocks. All right, so buckle your seatbelt. Let's get going. I'm going to go ahead and go through the administrational items first. So let's kind of take a look at that and see what that looks like right now. All right, so quick thing we want to do, of course, is go talk about the risks involved in trading. Like I always say, without those risks, there are no opportunities. So the two really go hand in hand, not only in trading, but in life as well. I think we probably by now we all know that, right? But you have to take some risks, but you want to be able to try to control those risks as best as possible. You just don't want to be flying blind out there. So we have spent quite a long time. We've been doing this now. The website's been active since 1998. I've been trading for over 30 years now, probably more like 37 years. And we've got a lot of experience in not only trading the markets using entries and exits based on our software that I created, but also too risk control. Big part of trading success is keeping those losing trades as small as possible. Let your winners run. And it's a lot easier said than done, but you need tools to help you do that because when you actually go into a trade, you want to calculate that risk right away. So that's really important. Also too, we deal in a realm of probabilities. So not every trade works the way we want it to. So again, you have to have risk control to get you out of the market in time before those losses get real big. Now, we're going to be looking at a lot of things. I'm going to give you my opinions on the market. I may even give you my opinions on, like I said, crypto, crude oil, and things like that. Check with your financial advisor before acting on information that I divulge here, because I don't know your personal situation. They do. And so some of these things I talk about, you can act on, some may be suitable for you, but others may not be. And so you need to run everything by your financial advisor because, again, past performance doesn't guarantee future performance. And in the markets, it's all about probabilities, okay, not certainties. So we can't really guarantee anything. All right, now, in terms of books, I've got two great books on money management. If you want to dive in and start implementing a solid money management program into your trading, which I highly recommend. All right, without it, you probably aren't going to be around very long in the trading environment. So you definitely want to take that into account. Money Management for Traders on the far right is a great book to get you going right away. Deeper Dive is the Trader's Money Management System. We've got the Survival Guide for Traders, my first edition of The Art of Trading, which actually came out in 2008. So my publisher Wiley has asked me to do a new edition. Glad to do it, happy to do it, because this is going to be the best book I've ever written, and it's called The Art of Trading on the Far Right, second edition, and that is going to be coming out later this year. And so really excited about that. It's going to be over 400 pages, maybe around 450, so a very, very good read. And it's going to take into a lot of concepts in the new market that we're seeing here, and also, too, all about our new software since the first book was published. All right, Elliott Wave Techniques Simplified continues to be a really great seller on Amazon, and it's all about the Elliott Wave. And what we do with that is we try to take the subjectivity out of the Elliott Wave count by providing you a means in which you can apply or attach a probability to a wave count. So definitely check that book out. We also have a ton of home study courses on our website. You may want to check that out. Go to traderscoach.com for that, and you can check out all our educational content. All right, let's jump in real quick and take a look. Hopefully you can see that okay. If not, I'm going to read it to you here. It may be small print on your end. But notice there we've got MBA mortgage applications out this morning already. I think the mortgage situation is still rather dismal, all right, at this particular point. We've got a bunch of speakers, FOMC minutes coming out today. And, in regards, we'll have to see what they say about that. It could cause a little volatility in the markets for sure. All right, so we'll kind of see what we think about that. If anybody has some ideas of what they think they're going to do with the rates, please put that in the comments area. I'd love to see that. My gut feeling right now, from everything I've read, we're probably not going to change rates right away, okay? We may see a rate cut later on, but, inflation is still kind of pesky, obviously, okay? And that could affect their decision, obviously, on interest rates. So we'll see how that works out. I know the real estate market may be a little disappointed. They were anticipating a lot of interest rates this year, but I don't think they're going to get them, all right? Either is the stock market. The stock market may not like that as well. So we will certainly see, but it'll be interesting to see what they say. A lot of times with the FOMC minutes, it's not necessarily what they decide on rates, it's what they say about the future. So we got to pay attention to that. All right, if we move on to Thursday, February 22nd, we got jobless claims coming out, all right? PMI coming out, existing home sales coming out now. We're heading into the spring season in home sales. I'm going to talk about home sales a lot in just a little bit, but I don't see it picking up that much, all right, if at all, but we'll see. All right, natural gas report coming out. Natural gas is, keeps going down, down, down. EIA petroleum status report coming out. We've got Fed balance sheet and a bunch of speakers. And then Friday, the only thing is the weekly Baker Hughes rig count. So FOMC, that's the big thing for this week, right? So keep that in mind. All right, now, when we look at charts, we're going to be looking at software that I developed over the last, 30 years of trading the markets. And we have charting software, we have scanners, and we also have risk control software. You have to know in trading the financial markets, it's kind of like a pie, all right? You got to look at it as a pie. There's a pie of finding markets to trade. There's a slice, or I should say a slice of finding markets to trade. There's also a slice of entries and exits where you get in, timing, all right? And that is a form of using software tools along with different types of technical analysis. Elliott Wave, for example, is what I use for that as well, and fibs a lot. And little things like inside price bars and stuff like that. And then we've got scanners to find those stocks, like I said before, and also risk control software. So when you combine that bundle, we call it the ultimate trading system because we just don't focus on entries and exits. So many people buy software systems that never really talk about risk control, and that's really bad, all right? Risk control is really important, and without it, you're gonna have a hard time being successful. So just keep that in mind. We also have a trial on all our software if that interests you. All right, so here's my latest chart on the Dow Jones Industrial Average. This is a daily chart where each price bar represents a full day. And so when we look at this chart here, basically what I want you to focus on is back in 2022, in the middle here, we had a high here, and then we had a big sell-off, all right? So that was turned out to be a wave 3. At first, we thought that may have been a wave 5, and we were going in for a big sell-off, but not the case because we took that high out before ever selling off enough to justify that as a long-term bear market, which we're still looking for once we finish this bull run. So unfortunately, the big bear market that we anticipate out there, and we're getting closer and closer every month to it, we're not quite there yet. But let's take a look and see where we are now in terms of Elliott Wave 3, 4, and here's our Wave 5 target zone for the Elliott Wave. So this is where I think the Dow Jones Industrial Average is headed. And so that target zone now is 40,281 up to around 47,426. So we got kind of a nice little zone there that we're looking for the market to go into. Now, obviously, since October, we've had a huge run up without much of a pullback, have we? All right, so that's kind of one of those types of big runs that you do get in the markets, but they don't last forever. And so we're probably going to see some form of pullback before we reach that wave 5 target zone. And that would be something like a profit-taking pullback. And I've got another chart I'm going to show you where I think the pullback is coming. But I'm just kind of giving you this chart to give you the big picture of what's going on for the markets. So then after that pullback, then we should start to move back up, all right, until we get to that target zone. Now, the markets usually don't move up straight up. You know, I have to be careful with the markets because you can't always say, you know, it works like this or it definitely works like this. It's probabilities. It's usually does not move straight up. It's zigzags. There's profit taking and then recovery and then a little more profit taking until the trend is done. And that would be at the wave 5 target zone. So once we get in here, whenever that may be, and I'll talk a little bit about that in a minute. Once we get in there, then we got to really be careful because at this particular point, it could reverse at any time. And once you end a wave 5 on an Elliott wave count, then that's the end of the trend. And this trend goes way back that I've really to about 2009, okay? So this is going to be a big move down when it comes. Now, it'll be a change in trend on this chart and a longer term bear market on some of the other time frames. So we got to be a little careful here. I think probably in terms of time, we got one pullback. We may be in that already. All right, I don't anticipate this to be too bad, but it will come down a bit. And then a recovery, all right? And then when we get in here, that's when we got to start moving our stops up and talking about in detail of what we can do to get prepared for a bear market. Now, as technical traders, all right, we can have that opinion, but we always trade price. So if the market is trending, we stay with the trend until it reverses. And a great analogy with this is, you know, think about if you've ever sailed a boat, right? Let's say they're predicting a storm in a couple days. Well, you're not going to put your storm sails up right now, right? You're going to continue to sail the current conditions. Same thing with trading the markets. You want to continue to trade the current directions until things change. And we'll see it on the chart when it changes. It'll start heading down. It'll start taking out support levels that would indicate that the market has changed to the downside. And we'll see it on our tools and our indicators. So you don't have to worry about missing out or being caught off guard, provided you got the right tools, right? So that's really important, and we'll try to guide you if you keep coming here every week so you don't miss it. But for right now, that's kind of what we want to do. Now, I will point out one thing. If we start pulling back, and this pullback starts heading down viciously, and we go below this point here, well, then we have to be concerned because it shouldn't do that on a profit-taking pullback. And so again, we'll watch that and see if that happens, but I don't think that'll happen. But again, you have to keep an open mind in the market because anything can happen. And sometimes it can happen abruptly. And you never know when a world event or something may occur to make that happen. Right now, we're high enough in like a 15% area where sometimes wave 5s end. So there's a 15% chance if we head down, it could be severe, but only 15% based on statistics. When it gets here, then you're in a 70% zone that usually wave 5s get to. So I always play the probabilities and go with the percentages, and that's kind of where they're laying out right now. All right, the next chart I'm going to show you is where I think the profit-taking pullback should go down to, and that is this zone here on this chart. Now, this profit-taking zone here is literally a 38.2 to 61.8 fib retracement based on the October run. And so that's going to bring it down to around 37,000 to around 35 and a half, so to speak, or 35,785 to be precise. All right, now what's interesting here, and the reason why I say we may have begun it, is simply because we put this high in on the 60-minute chart. By the way, 60-minute chart means that every price bar is an hour in duration. So that's a lot different than the chart I showed you before, where every price bar was a full day. So this is what they call a shorter time frame. So you get more price bars per day, obviously, than you would on a daily chart, right? So what's interesting is back on February 12th, we put a high in, and currently we have not breached that. So we could be in the beginnings of a bigger move down to the target zone. So we're going to have to see how this plays out. Now, could it make one more high? Sure. Okay. But we're going to keep an eye on this price here and see if it takes out this bottom here. And if it does, then chances are we've begun the profit taking area right now, or pullback. Now, what's interesting, one of our indicators is red here. Okay. We're going to see if it's still red, of course, because it can change. But it is red right now, indicating that we are probably in the profit taking zone, and we should take out this low here. So we got to kind of keep an eye on it. So that's where I think short term, over the next, let's say, month, hard to know how long it'll take to get down there, but over the next month or so, we're probably going to have some softness in the market and a pullback. But I don't think it's anything to panic about yet. Now, there may be some negative news that comes out. Some event going on in the United States or around the world that may cause it, but it should be a profit-taking pullback. So short-term panic, so to speak, followed by stability and then a lift again until we get to that wave 5 target zone. So that's the 60-minute chart. Now the next chart I'm going to show you is a long-term chart. This is the weekly chart. And again, I last did this on February 11th. I only update this one about every few months, because every price bar here represents a full trading week. So a lot different than a daily chart. So this is considered a long-term chart. So we've got some things going on here. We now have a green PTF. So we're still, as of February 11th, going to make new highs. And we did, okay. We made one on February 12th. But I still think it's probably going up. And we'll see if we'll take a look at that current PTF so I can show you what that is now. But we, when we reach wave 5 on the daily chart, for all you Elliott wave people out there, this will be a wave 3 target zone. And what happens after wave 3 is you get a wave 4. But the issue is the wave 4 will occur on the long-term chart. So that means this could take years to unwind. In other words, we could get to that target zone fairly soon, like by the end of this year, and then experience a multi-year correction. So we'll take a look at that when we get there, but that's kind of where we're at right now on that. So we'll certainly take a look at that. But that's where we are for the wave 3 target zone on this weekly chart. All right, I would focus on the daily chart for now, okay? That's where you want to be. All right, and then we'll take a quick look at the S&P, and I'll look at these live charts in a minute. But the S&P is making new highs. But again, if you look at the 60-minute chart, just like on the Dow, all right, it had a hard time creating one more new high. So this could be going into its profit-taking zone, and we have a red PTF as well. So basically the same forecast for the S&P. NASDAQ, a little different, okay, but it is also going into a corrective area here. All right, so I'm thinking I got to change this chart and put in the retracements now. But I'm thinking probably, let's just say around 15.4, probably at 15.2 on a pullback. And so I would expect that as its profit-taking pullback. So that's the markets, okay? If you have any questions, feel free to type those in the comments area. All right, let's quickly now go to the housing market. All right, so I've shown this chart 100 times, but boy, I'll tell you, the Case-Shiller line you can hardly see. That's this one right here. So I'm going to take my little pointer and I'll draw it out so you can see it better. I didn't realize that was so light. Give me a second while I just fix this a little bit. All right, because that's the main part I want to show you. All right, so usually this is the Case-Shiller and this is the CPI. Hopefully you can see that. If you can't, let me know, but hopefully that'll make it good. All right, so basically a Case-Shiller home price index. This is for the United States. This is not commercial. All right, this is residential. And what they do is they take the average prices every week and they update them and compare them against the CPI, which is the Consumer Price Index which measures inflation. And so normally, housing normally keeps up with inflation. That's why it's been such a good investment. All right. And people buy a house and they expect to make money on it. Yes, you may have periods where it goes underwater for a while as markets, pull back and then proceed and things like that. So just like the stock market, you can go down and then recover back up. So the real estate market's no different, but it usually stays above the CPI. That's the point I'm trying to make. But when it gets stretched like a rubber band far away, that's considered a bubble. All right. And you see that in the stock market, but you also see it in the housing market. And so this was back in 2008 where we had the financial crisis. And the interesting thing about that is it stayed stretched or bubbled for a couple years before it actually declined. And so bubbles can last for a while. So they don't always just reach a bubble and boom, sell off right away. They eventually do, but they can stay at that upper level for quite some time. And I think that's what we're seeing right now, because if we go to the far right-hand side of this chart and look at the current day here, look how far this is stretched now from the CPI. And notice that the CPI has taken a move up because it reflects inflation. So we've had higher inflation. So obviously the CPI is going to move up. All right. But so did housing. So it's remained quite a distance from the CPI index. So the rubber band is stretched, so to speak. And so what happens is eventually you get the rubber band snapping and the market pulls back to a reasonable level above the CPI. And so that's kind of what I think we're in tune for eventually in the future. When it's going to happen is anybody's guess. I would say probably, when the markets start to falter, you may see the housing market falter even more. Now, there are reports that, depending on where you live, because real estate's very local, the housing market has declined somewhat. But as an average situation, we're still fairly bubbled. All right, I think you have to admit that. You may see some housing going down, or you may just see very low sales activity. That's the other thing. If you don't have much sales activity, then the housing prices aren't going to be reflective of maybe lower prices yet. So that kind of thing. So in any case here, after the 2008 financial crisis, we moved down, we recovered. Interest rates were extremely low. We had COVID. All right, they pumped money into the system. Rates went almost to zero. We had people moving out of the cities. So the housing demand in the suburbs went up and brought it way up to these current levels here. So that's where we are. All right. And who knows, like I said before, what could eventually cause the market to snap and the bubble to burst. But it could be something out of left field that we don't even anticipate yet. That's usually what happens with bubbles. All right. Because they kind of foresee in the future what they think is going to happen. And then something happens out of left field and that screws the whole thing up and then the bubble bursts, so to speak. So that could certainly happen here. We'll have to wait and see. But the point I want you to take from that, we are bubbled. All right, now, this is another one I like to look at. Let me just expand this a little bit so you can see this one better here. So let me push that up. Hopefully that helps to read that better. All right, so this is home prices versus incomes. This is done by a company called RE Venture Consulting. And this chart here is about 6 months old, maybe 7 or 8 months at this point. They'll probably update it again. I'm hoping they will this summer in 2024. So this report came out in the summer. And basically what this says is that prices during the summer were 31% overvalued compared to income levels. So the chart I showed you before was compared to the inflation. This one is comparing it to income. And the darker the red, the more it's over valued, so to speak, in terms compared to income. So this was the 2008 crisis again, and this is where we were at the summer, and we've come back up. All right, so at that point we were 31% overvalued. I'd say we're probably 40% maybe overvalued. So now we've looked at two separate tables here indicating a bubble in the market. So we have to take note of that. All right, the next one I want to show you, of course, is the one where we have, let me just bring this back down. Hold on one second. Okay, so we'll try that. Okay, there it is. Debt to income ratio for all home buyers. Again, RE Venture Consulting. So I want to give credit where credit is due. And they are indicating here back in the summer a housing bubble based on the debt to income ratio for all home buyers. So as of 2023, around the summertime, this ratio was close to 40% overvalued, all right? And as they say here, those are near the worst affordability levels on record, according to the FHFA and their calculations. Even worse, they say, than the 2006-2007 bubble before the last crash. So, you know, if you believe in history and if you believe that eventually things correct down to their norms, you have to take away from this that the housing market is overpriced and due for some sort of correction. So it's not a matter of if, according to these tables, it's really a matter of when. Now, I like to give you an update on that. If anybody has any information on that, please put it in the chats. If you're finding that your home prices are coming down already, hey, let us know in that area. Now, I will say in certain states like California, you know, you had a situation where here's something that came out of left field for a lot of people. State Farm, for example, and a lot of the insurance companies refused to write insurance on property. Now they've changed that. Now, recently, over this last couple of days, I heard they are going to start doing it, but the prices are going up 50%. So that's going to also, you know, I mean, when you're talking about the types of increases, that's like an interest rate increase, for God's sakes. So that's not going to help the real estate market as well. So it always could be something we don't expect out of left field. All right, now I want to look at the full-size charts, the current charts for today. And what I'm going to do is I'm just going to go ahead and cut the cam off for a minute. And let's take a look at this. So this is the Dow Jones current day. And I want to focus in on the fact that we are still, all right, in a situation where we haven't broken the February 12th high, which is here. Now notice we had a greed bar, okay, indicating that we're fairly in a bubbled situation on this move up since we've been in since October. So we're kind of due for that pullback. And so we may be in it now. I think what we have to do is watch this lower level here, which is, you know, or watch this same one here. So this one, these two levels are pretty much the same. Whoops, let me just erase that. So this bottom here, all the way over to this bottom here are the same. So if prices take out that bottom, then we're probably on our way to the target zone, which is 36.4 down to about 34.830, give or take a little change there, okay? So that's kind of where we're heading at that particular point for this next foreseeable month or so. So keep that in mind. After that, we should see some stability. We should see no more red PTF indicating more lows. We should instead seeing things improve once again. Now, with that said, I want to make it perfectly clear. As we get towards the end of this year, maybe even middle summer to end of summer towards the end of this year, we want to pay attention to see where prices are in relation to our target zone. All right, if we look at this weekly chart, we're looking at around 40,352 to 47. When we get into that target zone, all right, we have to be careful. Start moving your stops up. You should be having a discussion right now with your financial advisor about what you want to do if the market starts to sell off later this year. Just have the discussion. That way you can have, you know, your ducks in a row and know what to do if the market does sell off. So I really would strongly suggest that, and now would be a good time. Now, with that said, once we start selling off after the target, the big target zone to the upside is reached, we can I expect a multi-year bear market and probably a 50% correction in stocks. That's huge. So I am not bullish past the end of this year. I am bullish short term, maybe towards the summer, but I am not bullish long term. Of course, after the big correction, once that finishes and the market corrects 50%, then I would expect the market to recover and start another leg up. But that's years and years away, okay? So that's where I'm at. So you kind of want to keep coming here every week so I can keep on top of the technicals for you and guide you through when I think the market's selling off, all right? So there you have it. And if you miss a live session, you can check out the recording, of course. All right, so that's the Dow Jones. NASDAQ and S&P are pretty much in a similar situation. All right, I want to jump over. I don't have much time here, so I want to jump over to the cryptos real quick. So cryptos have been on a tear. You know, we recommended this stock in our more subscription service that we have when it was under 10 bucks, and now it's at 45. Okay, you gotta love that. It's still going up. We still have green PTFs on the long-term chart and the short-term chart, meaning the daily chart. Now, we also are due for some form of correction on this at some point, but I do not think the bull market is anywhere near over on cryptos. Okay, now this happens to be an ETF, and there's many ways in which you can trade cryptos. You can do it in the futures market and so forth, right? And there's many, many cryptos. You got to be careful about which ones you choose, because if you get in the wrong ones, it's kind of like the dot-com bubble back in 2000, where you had a lot of dot-coms and many of them went out of business. So you got to pick. I would stay with the more prominent cryptos. So GBTC, if you're going to trade the ETFs, are good. I think Coinbase is good. All right, and they're all have gone up quite a bit. Coinbase has kind of reached a short-term target, so we may see some pulling back on that as well. All right, but it's a profit-taking pullback. So if you're not in these yet and you want to wait a little bit to get a better price, I think you probably can. So I think the cryptos will come down like the rest of the markets during this profit-taking phase. And the other one we can look at is Ethereum here. Okay, this is another one that's reached way up. And then following that is Riot Blockchain. So bullish on cryptos, but expect some type of pullback. The RIOT, which is the Riot Blockchain mining company, this one here has not has had a little bit more volatility than the others. So this may be actually one you could probably go into if we break out these highs here. All right, so keep an eye on those. All right, let me keep going. USO, and then I'm going to wrap it up here. So USO here, we're bullish on this. I'm going to open up the weekly chart to give you a better idea of where I think it's going. So we had a nice move down on this. Let me get my little numbers accurate there. You know, when you draw fibs in, it's hard to get them exactly perfect, but you want to try to get them as close as you can. All right, so on this here, we had an impulsive wave up, call it 3, 4, 5 target zone here. So I think oil is moving up now into roughly the $100 range to 125 on this ETF. And again, there's many ways you can trade crude oil. You can trade the futures market, right? All right, but currently it's at 73.05. So we probably got another 30 points to the upside before we get close to that target or in that target. So I think that's the way it's heading. Now, this forecast, of course, requires this to be a wave 4 or a pullback, and I think it is. All right, so I don't think we'll go below that. But notice after you get some of these moves up, you get quite a bit of volatility. So you can't keep your stop too close. So you want to have that under this pyramid here, right here, or the very bottom. So that's where you want to keep that. All right, TLT. Let's look at bonds here. And then we'll go over and show this one here. So TLT reached a bottom, but the problem is some of our indicators are indicating the overall bottom is not in. But we could get a little bit higher up into here. It looks like we're going to go lower, short, I'd say short term, probably below 92 here a little bit, and then probably get a little bit of movement up. So based on the chart on the far right, should look something like this, a little lower, move back up, and then sell off, provided this stays red. Okay, so I'm not all over TLT. Silver, let's take a look at that. Got to put a weight on this. Now, silver is kind of an interesting animal here. All right, it's very consolidated and has been for pretty much a year now, right? So it's kind of gone up, it's gone back, it's kind of been bracketed. You could almost draw a pennant, which is a form of technical analysis in here, something like this, and then maybe something down here like this. So you could remain range bound in this area for quite some time. Now our software is indicating it should break to the upside, but it's not telling us when quite yet. So it's not giving us a buy signal yet, but these indicators down here are biased to the upside. So we should see some movement to the upside. No rush to get into this. Let's wait for it to start to break out before we kind of get excited about it. So that's silver. All right, gold. All right, gold has higher highs coming. All right, this indicator is indicating higher highs. We are going to go back into the target zone on gold. So expect that at some point. And then UNG, natural gas ETF. These are all ETFs making more lows. Are indicators that are indicating even more lows are coming. So amazing, you know, how cheap natural gas is right now. And yet I can tell you, probably you're along with me here, our bills for natural gas aren't that cheap, right? They've gone up, but the gas itself has gone down. So I'll leave that summary of what you want to make of that up to each and every one of you. All right, so those are the ones I wanted to cover. Trying to think if there's anything I may have missed, but I don't think so. I think I covered those pretty much all the major elements there. So again, come back next week. We'll see what changes. And in the meantime, I will post this, watch the recording. Of course, it'll go on YouTube as well. And we'll put some links in the recording for you to access books or software if you're interested in purchasing that. And we'll see you next week. All right. So thanks for tuning in, and expect a little bit of softening in the market here over the next, I think, few weeks. We need to move down into that pullback target zone. All right. So again, for those of you that are our clients, we have client support webinar coming up in half an hour, and I'll probably see many of you there. All right. Have a great week, everybody, and we'll see you back here next week. Thanks so much.